market. Vance Howard joins us, portfolio manager, CEO at Howard Capital Management. Vance, welcome back to the show. It's been quite a week here, and we're seeing stocks and trades and themes that hadn't done anything for a long time wake up. So how do you capitalize on that?
I think it's been a great week. You know, when we saw small caps break out, we took a position in small caps, I guess, about 2 weeks ago as we started to see it break above an HCM pivot point, and that's been a good trade for us. Yesterday was the first time that we've seen in quite a while that Magnificent Seven moved to other areas of the market, which is, you were talking to your last guest a minute ago, how productive and good that is for an ongoing bull market. So we're seeing a shift into other areas, biotech, small caps. So it's pretty exciting. I think you've got a really strong bull market here. Pullbacks are all viable. We were a little top heavy. So, yesterday's sell off probably shouldn't have been any surprise to anybody. But I think if you're not bullish in this market, you should get bullish pretty quick.
Vance, looking at your notes, talking about cash on the sidelines, you tag it at $6 trillion. Where do you get that number? What kind of data is that?
Well, we pull that off of a couple of different sites. That, you can look at money market holdings and you can look at cash on the sidelines. But Oliver, you and I, every time I'm on the show, we talk about cash buildup because cash buildup is incredibly important to the ongoing sustainability of a bull market. Because that cash, as it gets put to work, markets continue to move higher. But that $6 trillion has been sitting there and really hasn't backed off any, even with this bull market we've had for the first 6-7 months of the year. And you would think that some of that would be pulled off and put into the market. So that lets me know that there's a lot of buying power out there to move this thing higher. And there's a lot of great stocks that are undervalued now because the Magnificent Seven has been clearly carrying the market. There's no doubt about that. Yeah. And I think that's why you're seeing biotechs move higher. I think you're seeing small caps move higher. So I think it's any pullback's viable right now.
Get to some of the sector stuff in a sec, but I think part of the reason that $6 trillion is not moving so much is because people are getting 4.5%, 5% in there. I mean, it's not a negligible trade, a decision, right? So is that going to be as fungible as it was when it wasn't earning anything?
As he starts to reduce rates, I think you'll see that money come off the sidelines reasonably quick. And I think that's one reason, like we were looking at DVY, the ETF of the high dividend paying stocks. I think that's the reason you saw that move much, much higher yesterday as people sort of anticipating that money market income decreases, they're going to look for other opportunities to try to keep that stream of cash flow coming in. So it's an interesting thing, to watch what's happening with money markets, what's happening with cash. And also when you look at the 1 to 2 to 3 month treasuries, if rates starts to come down, you're going to see them sell those bonds and move that back into decent, areas of the market.
Okay. So biotech, you mentioned, small caps as a whole. Does this week kind of give us clearance to just buy those groups en masse, or do we still have to be aware of where there's debt burdens, where there's lack of profits? Because a lot of that stuff does fall into the lower quality from a factor definition camp.
I think that if you look at it from a technical standpoint, Oliver, and I know you look at technicals just like I do, you had that nice breakout, in small caps. You had that nice breakout in biotechs. And they've just been trading sideways for so long. They're about to bore you to death. And they've really done virtually nothing. And they've been very dependent upon interest rates. Like your last guest was talking about, small caps especially are very interest rate sensitive because that really affects their earnings. And what's driving this market is earnings.
When you look at this coming season, what are the most important? I mean, I feel like AI, obviously, right? They've got to live up to the valuations. But if we're looking for insight on the real economy, not the secular trend, which sectors, what do we look for, Vance, that tells us, yeah, things are good or bad?
Well, you got to play tech. I mean, tech's going to still has to be a major part of your holding in just about any portfolio out there, because with AI, that's going to be the most impactful right there. I think small caps could benefit from tech because if they can reduce their cost by way of artificial intelligence, that's going to be another, a place that their earnings could increase. So I think it's pretty much across the board. And I think I'd stay away from utilities. I'm not too interested in that. But other than that, technology, I think consumer discretionary. I think that you're looking at small caps. I think hey, here's another thing, Oliver, that people are missing. We were watching the convertible bonds today, like CWB. They broke out today to a 2-year high. So if you're looking at a good place to look at the bond market, convertibles are looking pretty attractive also.
Interesting. And where do those slide into the strategy, Vance, between equities and fixed income?
Well, we trade that in our bond portfolio. So
Okay.
we'll either scale into 1 to 3 month treasuries, long-term treasuries, I love trading convertibles when they're working. When they're not working, then we stay away from them. I look at any stock or ETF just like a rent house. As long as it's paying your rent, keep the renter. When it quits paying your rent, fire it and get you a new one.
Yeah. All right. Nice. Good. Like that ticker CWB. One for us to watch. You mentioned biotech, IBB. Mentioned the big tech in there. The healthcare side. Merck, Regeneron, Moderna. You like one other pick before we let you go, Vance, is Salesforce. Tell me about that, because I think that's a really interesting story as kind of the leader of cloud. But so many of those cloud companies have been dragging while the rest of tech rallies.
Well, they've got good earnings. They've got good management. They had one little hiccup in their last earnings and revenue release, which they got pounded 20% in a day. So I think that's a screaming buy with the overreaction. And when that happens, Oliver, you and I talk about this too. That was quantitatively driven. That wasn't mom and pop, and that probably wasn't even fund managers. That was quant systems just selling the Salesforce. But Salesforce has the ability to really benefit from AI if they apply it effectively and can build out different mechanisms to use AI. That could be a real beneficiary for them.
Okay. Vance, good to catch up, and we'll watch the themes, we'll watch the stocks, and I think if Salesforce does turn around, then you've really got a kind of pickup in a sector here that's been left behind. So good ones to watch, like the convertible bond reference too. Thanks, Vance.